Good morning, everyone. Welcome to the Stock Market Morning Prep Video Weekend Edition. Wanted to get out a few of my thoughts on the market and where I think this crazy market is headed. We had non-farm payrolls come out on Friday, and we had unusual price action on Friday. Actually, believe it or not, was more bullish than anything, and this is what's kind of surprising to me. We had 280,000 non-farm payroll numbers come out, which is actually very good. And to me, that actually fuels the Fed to move on raising interest rates sooner rather than later. Now, if they raise a quarter, it's going to do absolutely nothing. But the fear, just the fear of rising interest rates, has been actually affecting the mortgage markets, the credit markets in a big way, especially that bonds have been selling off. Now, bonds selling off could be a good thing, too, as well. Rising interest rates obviously doesn't help anything really, even the economy. But a gradual increase in rates is really not going to do much damage. I did mention bonds several weeks ago that I believe has topped and is topping this year. And we continue to get a sell-off in bonds. We did on Thursday. We did get a push up on bonds yesterday, which obviously increases mortgage rates, credit card, automobile loans, right across the board. So I do believe that bonds will continue to sell off. Of course, we're going to have bounces in bonds. If we had a real good bounce in bonds, then I think that bonds would be a great short sale, of course, down the road. Nothing goes straight down or straight up, so just keep that in mind. But the bullish case of bonds, the money's going to go somewhere, right? So if money rotates out of bonds, where are they going to go? They're going to go really into the equity markets. Real estate is pretty much dead, unless you're flipping houses or, you're buying for the long term as an investment and you're paying just about cash for it so you can collect the rental income. That's great. But pretty much it's going to be stagnant once we rise in interest rates. So we had some poor mortgage numbers the other day where people were now mortgage applications had dropped because now we're up over 4%. In the 30-year, and it's still very good, obviously. But people get discouraged if they wanted to wait for that lower prices, and maybe that's going to happen, so they don't wait. So they wait, and then the mortgage rates go up again. So now they're kind of bummed out about that, which is understandable. But getting back to the longer term, we see that when when bonds actually start to sell off, money is going to flow back into equities, and it's going to put a bottom. There is a good chance, though, that obviously that the markets will sell off, even though when bonds sell off. Now, if bonds sold off really hard, like some sort of like a crash, that's going to really hurt equities as well. That's going to be scary because you have corporate debt and what have you. But that'll definitely really start a sell-off in equities, at least in the short term for a couple of days or so. But if bonds just gradually sell off like they had been doing, aside from 2 days of really some nasty selling, the equity markets are going to really handle that well. And that's, again, going to bode well for equity prices. So that being said, I like the fact that equity markets are holding into this upper end of this range here. Now, this is the ES. This is the electronic E-mini S&P futures contract, and this is continuous. So I just want to show you kind of a better picture of where we are. This 2080 really below here, you can see the volume profiles. We break below this area here. And this is going to be a big area for next week's trading. This low, this Friday's low, if we break down that low, you're going to see that 200-day come really quickly. You might see a little pause in this area here, okay, which is going to obviously, when that does happen, the 200 will probably be up there and catch up right to that line. That's going to be a very big area, that 2050-ish area, okay? Now, you can see on our MACD and RSI, we're really rolling over here. So there's no momentum to the upside. Momentum is clearly to the downside. So that indicates that we should be selling rallies. Okay. Now, the problem with the price action of late is that we have the algorithms working against us. So if you are short, you would be short into, let's say, an area of resistance, which is great. But by the time that price action starts to sell off lower, what happens is the algorithms. Now you have real selling coming in, right? Then you have the algorithms probing for stops, and once that happens, it just fuels a big move lower for like 20 minutes, 30 minutes of the trading day. But then that big move is over. Then once that happens, the market stabilizes and just goes sideways all day, producing really no good quality trades. So I wanted to put that out to a lot of people, because people ask me, well, what do you think we should do? I said, I think you should be patient and wait for the quality setups. If you are short coming in and you get that move lower, hey, hats off to you. That's great. But if you're day trading, you don't just close your eyes and get short, hoping that the markets are going to roll over. Okay, that's not trading. Quality trading is picking quality trade setups based on your trading plan and understanding where your risks are and where the markets may go, where that position may go. And that's how you manage a trade, not by a stock or a future, just shooting down or up and then just say, oh, I'm buying it now because everybody's buying it. I mean, yeah, it does it work? I guess it has been working the last several weeks, but that's not really trading. You want to wait for a quality setup. If you're short, you want to look for something into resistance, and if you're long, you want to look for something into support. So I wanted to get that out there to everybody and understand that this is a crazy market. And as you can see, what happened, we held, and we have a nice big doji star. Now, this is an indecision candle, right? This is only valid if we have a turnaround if the market takes out the high of this candle on Monday, right? And that's going to be right here. That high, which coincides perfectly with the 50-day moving average. If we take that out on a closing basis, we are possibly headed higher. We do have some resistance at the 20, okay? But at least we would catch that upper end that is a Bollinger Band. That would be the trade for that retracement rally back up to challenging new highs. And then we would reevaluate it, okay? So the low of Friday, okay, or the high of Friday's high. So that candle is going to be the high closing or the low closing would be a trend change, right? We would have that trend change if we're back above the top of the high of this doji candle, or we would have a continuation to the downside. And I think if that does happen lower, it's going to be really quick, guys. So you're going to need to really be on your toes next week in trading, all right? Now, that's the ES. Now, let me show you what I thought was really bullish in a moment. Qs, holding on to the 50-day moving average, right? Okay, so we are doing okay. And, we do have some distribution days. You can see that we are momentum indicators, again, rolling over. That's not a great sign, okay? So we need to be on our toes here. And if you guys are swing traders or you're long-term investors, I would not be looking to buy anything yet. I think prices do come in lower in the next several weeks. When? No one knows. But I do think that equity prices come in a little bit lower. It's been way too long, too much of just continuous buying since, let's say, the low of October of 2012 that I've been showing you. I mean, literally straight up in a line. If you looked at the monthly chart, it's actually pretty comical that it's literally vertical on a monthly chart. So, but what does that mean? Does that mean to go sell the market Monday? Absolutely not. We stick with the trend. Now, the short-term trend is down. We know that. Now, let me talk to you about the two reasons why what I think possibly equity markets may hold. Now, we have the transports, right, which are well below the 200, right? Now, this is a very bearish chart. There's no denying it. But what's happening here is, and you can't deny the fact that we had an up day, down day, up day on Friday. So that is interesting developments. Now, we're not quite oversold yet in RSI or MACD, but we could possibly, if we could take out Friday's high, then I think that we'll have a shot to the 200. And that would help have that retracement rally that we're looking for, okay? Another really bullish indicator, believe it or not, is the IWMs. And I have to tell you, I have no idea. The Russell just continued. Somebody was buying a Russell all day long. And that is what I'm saying now. We have a contraction of Bollinger Bands, right? That means we have volatility contracting here. Now, this is something that you have to watch. It doesn't tell you which way it goes. But if we have these higher highs and higher lows, this is the most bullish chart of the 5 index that we follow. And I mentioned several days ago that the Russell actually usually gives a precursor of what's to come, usually tops or bottoms before the major equity indices does. Okay? Now that, to me, is bullish. This is a bullish sign here, guys. I don't know what's going to happen, but I will tell you, when you have mixed messages, it's best to just pick the side of where the markets are headed for the day, obviously if you're day trading, and then look to follow that trend pretty much most of the day. This is a very bullish candle. Russell's a secondary leader to the transports, and the Russell did well, and the transports did well yesterday. So that, to me, is like, I wouldn't be crazy short here, okay? I would like to see the Russell break the 50, and I would like to see the transports reverse Friday's low, and of course every other indice that I just mentioned take out Friday's low as well. Then I could get a little bit more aggressive to the downside. As of right now, I'm still neutral on the market. I do suspect that we sell off sometime this summer, the next several weeks, okay? Last one is the diamonds. You can see the diamonds just a sloppy mess here in a downtrend and probably going to tag that 200-day moving average. So in conclusion, I just wanted to point out the transports and the Russell did very well. Two secondary leaders did well on Friday. The markets did not sell off as we all anticipated due to a very good number, a non-farm payroll number of 280,000. That, to me, is a concern if I was a short seller, okay? I would want to hold off and wait and see we take out Friday's low. Friday's low is going to be a pivotal low for the next several sessions. Keep an eye on that. Again, if we take out Friday's high on that doji candle on the ES, okay, same thing on the spiders, then that's something to me that we are now going to revert back and at least challenge those highs that are upper end of those Bollinger Bands. Guys, I hope it helps. I wanted to get this out for the weekend just to kind of give you guys a real decent analysis to get ready for next week's trade. Next week's trading will definitely be challenging, to say the least, until the markets either break out or break down. As of right now, we're really not going anywhere too far too fast. But with the 280,000 non-farm payroll numbers, it's going to be interesting to see, because I would have suspected that we would sell off and sell off pretty hard, because that pretty much seals the fate that Janet Yellen, our Fed chair, is going to raise rates sooner rather than later. But we shall see. Let's see what happens. Let's let the markets decide where's the next move, and let's jump on that wave right behind it. Have a great weekend all, and I'll talk to you on Monday.